Welcome back, everyone. Pickers Market, episode 56. Still going strong. Joined by Tyler, Lisa, and Kyle. The new foursome. Strong, right? That's right. All right. Let's. Last week we had our big university in our campus here, so it's RIAU, which I can never say very well.
You have to like separate it out.
You do.
RIAU.
We had about 50 new advisors. I thought it was a fantastic event, and just want to get you guys' impression, kind of what your thoughts were, highlights, maybe some lowlights, and kind of what took place last week.
Yeah, I thought it was great. I had a chance to talk with quite a few of them. I mean, as much as you can talk with that many of them in just a couple of days span. But I don't know. I thought it was a pretty strong group. I think there's going to be a lot of really good producers out of this one. But for us, it's always just following up with them post RIAU, just because, they get back to the daily grind, and hopefully they took some things away from it. But at the end of the day, they're also running a business, and there's a lot going on. So we have to always stay on top of them. So hopefully we can do that and kind of ramp their production up from here.
Yeah. Lisa, anything?
No, I think it was great. I mean, it's always a lot, right? I mean, the attendees always drinking out of a fire hose, it seems.
For sure.
Because it's just a lot of information all packed within 1.5 days, basically. But I think it's Gradient like does a very good job in setting it up very professional. So I think that gets over really, really great that this is set up like it is. And kind of great speakers and great content. No fluff. We really get down to business.
No, it was good. And I think
good.
the feedback from them was very positive.
Also the mingling. I mean, like Tyler said, you have just so much time for people to mingle. So you kind of try to make the best out of it. But I think it was a good group. I think there's a lot of potential within the group.
Yeah, we make a lot of good connections there. So Kyle, this is your first event, 3 weeks in. What were your thoughts?
Yeah, no, I thought it was great. Tons of mingling time. Everybody was very, very nice. I thought it was, in terms of the value proposition, what Gradient provides to the advisors just in total is really, really, I think, eye-opening for a lot of the people that came through. I mean, when I started my career as an advisor, there was a certain process that's there, and I was under the flagship of another company, whereas these advisors are under their own.
Yeah,
so
they're
having that ability to leverage resources from Gradient is really, I think, an eye-opener that they should all be taking advantage of for sure.
Yeah, well said. Exactly. That's a good summary of it. And the other shout out I'd like to give is Luson Media. Obviously with a lot of people that are impressed with our building. We had I think we mentioned in the past, we had a flood, and they put a lot of money into the whole setup of the entertaining, the venue. But Luson Media as well, with the the podcast room we have here, the studio for shooting videos. Everybody comes in like, wow, that's very professional. So when they come in, advisors, they can shoot videos and podcasts. It's pretty impressive. So
I think it's great because when the advisor, when we bring them on, and that's one part where we want to have them here, is like they see the whole company, and then they're like, wow, I did not know that you were so big.
Yeah.
And like this is also professional, and then I can really see the departments and all of that, how it all comes together. Because when you're not here, it can be a lot, right? You can work with different parts of the company, and it's a lot, right? Luson Media, Case Central, and everything that we offer. And when they are here, we can actually show them, and we see, hey, this is what it is, and it's actually pretty cool
and
operation here.
The feedback I heard from one advisor said they didn't want to leave. They really liked, which is great feedback to hear. So it's like
I saw him this morning.
Yes, maybe they didn't leave. So
well, the other thing that I thought was good too is just last point on that is we had our advisors are very generous. Our successful advisors are very generous with their time, and we had 3 100 million plus advisors here also.
Yeah,
giving advice, talking about their business, how they're running it, how they started from $0 in assets, getting to where they are today, which I think is an invaluable thing for us to have when we have those types of advocates. And the fact that we had 3 of them here for this big group was also pretty amazing.
And it's also pretty, that's the last, sorry.
That's fine.
But the last point on it is it's really surprising to me or great to see that the larger advisors wanting to share their
Yeah, no,
ideas.
it's impressive.
Not a whole lot of elbowing, and it's a competitive field. It is,
It
but
is.
it's still they want to share that. They want others to be successful as they are, and they want to give that networking and community, which is great. There's not a whole lot of, oh, I do it better than you, and
Yeah,
all of
that
all
surprises
of
me too. That
competitive.
just the
It's
camaraderie is
yeah,
among
yeah.
the group. So, all right, we'll jump into this. Lisa started this. We'll do I'll tell you 3 facts. 2 are true, 1's false. I hope you didn't read on these. Are maybe try to toughen up here a little bit. All right, first one. We're gonna go with number 56, right? So that's episode. So 56 is the degrees which most staircases are built for optimal comfort and safety. We'll have to touch on Tyler should know about building stairs. B, the number 56 is another football jersey number of Lawrence Taylor for the New York Giants, and I also have his jersey. C.
Why didn't you wear it today? That could be a
I
good
don't know.
hint.
There you go. Periodic table 56 is barium. Anybody know what the symbol for barium is?
No, I don't even know what barium is.
No, do I.
No.
If you don't know, you always just take the first 2 letters. It's BA.
Okay.
That's my rule of thumb.
That's
Anybody know?
That's
Speaking
a
of
ticker symbol
symbols,
for boy.
symbols of the periodic table. Anybody know what gold is?
AU.
AU, nice.
Oh, Tyler.
Did you know that, Kyle?
I did know
Yeah.
that.
I got when I was in high school. Someone always said gold. I was like, usually it's GO, right? The
Mhm.
AU giving me back my gold. That was kind of how I remembered AU.
Jeez.
Anyway, all right. Who wants to start this? A, B, or C? Fun stuff. Lisa, I'll start with you.
Okay. That's a tough one, to be honest.
Mhm.
So periodic chart, as I said, I do not even know what barium is, the actual
Nor do I.
material here. It could be, so I don't know. Number 56, football jersey number. I think you clarified that for me the last time that there are actually 56 numbers, so could be as well. 56 is the degrees. I have no idea.
Wow, stumper.
I take A.
I mean,
I take
alright.
A is wrong.
Okay.
I don't know.
this is where I don't know with stairs, because stairs, it's all about the rise over run and making sure that all of your your rises are the same heights as you go
Optimal
down.
comfort, Tyler.
But
not with your backyard and the fiasco of you building steps.
So don't talk to me about steps. But
That's why I put it in there for you.
3/4 of an inch off, and I got dinged on the freaking whatever.
He prefers an 80 degree.
Yeah, exactly. Straight uphill.
No
steps. Elevator.
I guess I don't really know Lawrence Taylor's jersey numbers, but 56 sounds kind of right. So I'm just going to go with C, periodic chart.
All right.
Ooh, we have a little
nice.
difference
Kyle,
today.
what do you got?
I'm going to split the difference then and say B is not correct.
All right. I'll let you guys know. A is the wrong answer.
Oh,
Lisa.
good guess.
And the reason I brought it up because Tyler had a fiasco building steps. It's 65 degrees. I kind of threw the numbers backwards.
Got it.
LT was 56. Lawrence Taylor. I do have his jersey as well. Okay. And barium, again, that was kind of a throw-in because no one knows that one. But yeah, Tyler, you want to talk about your step fiasco quick before we jump into some real stuff?
I didn't even know about that. That's a new bullying.
So last year I built my deck.
Yeah.
And I put stairs off, and so and I didn't really know this until the inspector came out, but all of your rises, so like your step heights have to be the same from the top to the last step, right? So you're not having this awkward.
Makes sense, Tyler, right? Since normally steps you go in any building, they all seem to be equal to me.
But like it's so much easier just to go buy the pre-made like steps from Menards or whatever, rather than trying to build your own stair tread, because it's a lot of calculation, and I didn't know how to do that. So I could have YouTubed it, but I didn't. And so my last step is like, so all my steps for my deck are like 7 inch or like 6 3/4.
That's a normal number. Yeah.
And then my last step is like, what was it? It was like 5 3/4. So it was like an inch or so off from all the other ones. And the inspector came out and was like, yeah, you got to rebuild your stairs.
Oh my God, really?
And so
he's only got like 3 steps anyway.
I have like 4 steps. And
it's not like he's got a...
And it's like, it's going down to grass. And he was like, well, you have to make sure it's because of X, Y, Z. It's code because of these reasons. And I was like, that's BS. And so then I was driving around, and some of my neighbors have a deck that was recently built. and the step was like on the ground, basically.
Mm.
Like it was like an inch or two off of the ground. And so I took a picture of it and had the inspector come back out, showed it to him, and I was like,
You sandbagged the neighbor?
Yeah, exactly. Can you
I was
believe that?
like-
It's unbelievable.
Here's his address.
Yeah.
and so then
You go over there and rip it off.
So he comes back out and he's like, yeah, you're good.
Then all of a sudden you're good.
Good
So-
stuff. All right, let's jump in. Wait, what? Let's talk about the markets. Kind of obviously we're back in positive territory in the S&P 500 after starting out positive, having a pretty aggressive sell-off, now aggressive rally in my mind. So one of the things that's been driving both directions been the Mag 7 stocks, and this kind of surprised me that I knew that they were sold off pretty aggressively, but they were down at one point in time about 25% as a whole year to date. Now they're only down 5% again, where the S&P is up about 1%. And I mean, if that means the 493 are actually up about 4%. So you guys have any thoughts on what's going on there?
Well, my take on it is part of it's also valuation, right? We talk about the S&P 500 valuation being expensive, but if you actually break apart like the Mag 7 versus the S&P versus the rest of the 493, like the 493 is trading at like 17 times earnings, whereas the Mag 7 is trading at like 23, 24, bringing the S&P up to a 21, 22 times. So there's plenty of opportunities in other names outside of the Mag 7. And so on this type of pullback, you've got high price stocks versus low price stocks, and revisions haven't been as poor for some of those, I would say. And you've had some decent earnings, especially Kyle's talked about some of the industrial side, right? Revisions are getting better. So I think you just have more opportunities outside of the Mag 7 right now.
Lisa?
Yeah, I think when we came into the year and when they started to deteriorate, I mean, they drove the bus in performance the last 2 years, pretty much. It was nothing, else all that much, and with their weight in the S&P 500. And then to Tyler's point, valuation, and then we had a tariff uncertainty on top of that. And then the growing concerns if they can keep up the DI spend, which is necessary for them to keep on performing. So I think all of that concerns kind of was part of why they sold off in the beginning of the year and coming in. I think now that most of them, all but one, reported their earnings already.
We have NVIDIA hasn't, which they report next week.
Yeah.
Broadcom too.
That's
not Mag 7.
Come on, Tyler. Let's stick to the show, not in your own stocks that you got going.
No, but overall, I think earnings season alleviated a lot of those concerns for the Mag 7 that they can keep on performing, and so.
Yeah, I would piggyback on that. The one interesting observation, I guess both of those points are very fair. I saw a chart this morning from Goldman looking at valuations and how they compressed for the Mag 7 in particular. They were extremely extended, and now they're just, they going into the end of April, they compressed back to quote unquote normal, and now they've, with this increase again, they've expanded again a couple turns. And the interesting part though is I think going forward, keeping an eye on the expectations and that narrowing gap of what people believe will happen. We've seen all these surprises really driving the group higher for the Mag 7 over the last couple of years. It's like just this unexpected excitement. And now during earnings season, we've had a lot of bottom line kind of earnings beats across the board in general. But the top line has been, it's beat, but on a much lower level. So I think going forward, the question is, does the Mag 7 versus the S&P 493, does that expectation of growth kind of start to normalize on both the top and the bottom line? I think that'll be something that probably will be a story to watch throughout the next couple quarters.
Yeah, I think you guys all hit valid points. The other thing I would add is I think as a whole, the Mag 6 or Mag 8, if we're throwing Broadcom in their expectations, they
Just
were
throw Tesla out.
Yeah, they were better than expectations. Like you said, I think other companies were better as well. But I think that A, they were better, and B, what surprised me is my other takeaway is the CapEx spend out of these guys for AI. I thought that would come down a little bit, kind of with the nervousness about tariffs and just everything that's going on, the economy kind of slowing a little bit. They actually went the other way. They actually, several of them most of them kept it the same, but there's several that actually increased it, which that was for me kind of like, that's interesting that they're that confident and that much of a build in AI that they're actually continue that spend. So, obviously they drove the performance down the S&P 500, and I think they're helped leading it back. But then if you go into, the actual earnings, kind of what actually came out of it and kind of the revisions going forward, kind of you just touched on it a little bit. What also surprised me is they kind of held their guidance where the other 493 actually took their fiscal year guidance down by about 4%. S&P went down about 3%. So I think that kind of explains, and you touched on it as well, is valuation went from pretty extreme relative to those 493, that 17 times that you threw out versus, mid to higher 20s. That came down as the stock sold off, but their earnings kind of didn't come down as much as the rest of the space. And to your point of, okay, now is it normalized? I would argue that their growth rate is still quite a bit faster than the overall market. So they deserve some kind of premium. It doesn't matter what that premium is. And I don't think all those Mag 7 or Mag 8, for Tyler, that are all quite the same either. I think you have to be very selective in that space.
Yeah.
But it's certainly a space you still want to, in my mind, want to own it. It's just a matter of which names you want to own. And again, if fundamentally they're going to continue to outgrow the rest of the market, they deserve that premium. So I thought it was an interesting takeaway, just how the magnitude of earnings going forward. You guys, any thoughts on that?
Yeah, I mean, it's not, demand isn't slowing for AI, right? Like the misses that we had, Amazon was a good example. Microsoft has been a couple of quarters prior to this one, but it was just capacity, right? So they need to continue spending on all of this just to get that capacity up to meet the level of demand that there is. I mean, more and more people are using AI type stuff, and you're seeing Kyle showed me a video of this robot type thing.
Driving an F1 car or something?
No, but like the capability of that and having it run on some type of AI system, like it's just going to continue to grow. And it's pretty incredible what some of these things can do now. And it's only going to continue to get better. So the spending just has to continue at this rate, if not higher.
Yeah, look at the productivity that's going to increase in some things, right? I mean, whether it's just editing, articles you write, or just things that you've shown, robotics, as they get more powerful. It's obviously people worry about displacing of jobs, but I think it's just going to make people more productive in other areas.
I mean, I think certain industries, there's going to be a lot of displacement for sure. Like we're talking about manufacturing,
call centers, right? I mean,
I mean,
I just did one last night on what I was calling, but also got through. It was like way better experience than in the past. It was like hit 0, and then all of a sudden you get halfway through it, half hour, and then it hangs up on you. And then this one, like literally answered. I was doing an oil appointment, just sitting. I was like, okay, doing, a couple buttons, and it was pretty impressive. Lisa, any thoughts on kind of the earnings? I mean, the other fact I didn't mention is they beat by 15%. These Mag 7, which is bigger than they have for the last several quarters of years.
That was kind of surprising. But I think that was needed for investors to kind of keep on the Mag 7 magic here. And I mean, some of them really, especially the commentary around AI spend, like full speed ahead. We are not slowing down. From Meta, for example, AI spend at all-time highs. So we see actually monetization coming in, and it works out great. Microsoft, on the other side, didn't really slow their CapEx spending all too much, but you can see already they are not increasing their AI CapEx spending by that margin, because they are like more, hey, we're in a phase, we keep on going, but we now increase efficiency as well. And we find some efficiencies there that can help us going forward. So, which is, I think, was an interesting detail as well. It's not just we're blowing out the money, but it's more like on the back end. Okay, we have efficiencies to increase, and we kind of look where we can add capacities and all of that, which was interesting for me to hear.
Yeah. Kyle, you got anything to add on that? I mean,
the one thing, I mean, again, it goes back to expectations, right? It's, meeting those, I think the comment you said was, that 15% was needed, right? So it's almost like that whisper number from back in the day, right? There's
flashbacks,
right? Your PTSD is kicking in. They can hit the number, but if it's not good enough, Nvidia next week, that's something to keep an eye on. I guess the other thing that creeps into my mind is 4 of those 7 Mag 7 names do have kind of this perpetual kind of black swan like event in terms of regulatory kind of monopoly lawsuits, these antitrust lawsuits that have been waiting in the wings. I don't necessarily think it's really anything. I feel like Google's had that for over a decade with the GDPR stuff in the EU and the data privacy and all that kind of stuff. So that stuff is maybe priced in, but it's definitely something to keep an eye on.
Nice. Okay. Changing gears, let's do the hot button. I actually was just on TV right before this, and one of the questions I got asked.
Rockstar.
Yeah, there you go. Throwing a little shameless plug. Anyway, one of the questions I told Lisa, they kind of asked some random questions, but anyway, one of the questions was on interest rate and the U.S. debt. Kind of, is that an issue? And right now, the interest expense of 2024, that's the latest we have data of our revenue that we bring in. 13% of that went to actual interest expense. You know, the amount of interest we have on our debt. What do you guys think of that stat and kind of where we are, where we're going, and something to watch out or not? Kyle, you want to start?
Yeah, I think it is definitely a perceived issue. It's definitely a problem that's been growing, and I think it's probably a catalyst. I mean, it's been in the commentary of the political talking heads for the last year as a potential point to create dry powder to lower the interest rates.
Yeah.
Whether that's a good idea or not is above my pay grade, but it's definitely something interesting to think about. I did look up some of the stats post the RIAU, some of the good conversations I had with advisors last week that were here on this very topic, and a parallel shift down by 100 basis points in the yield curve for U.S. debt would save us about $1 trillion cumulatively in interest expense.
That's crazy. And that's why you can see the administration pushing hard on
right.
on
So
the Federal Reserve. Right?
Yeah, I look at that stat and I'm like, wow. I mean,
that's a big number.
That is a huge number, and if we don't do anything, or if, the rates don't adjust lower, it definitely could squeeze out other veterans benefits or Social Security, education, military spend, that kind of stuff. It's
it's real.
Yeah.
Lisa?
Yeah, I mean, overall, the amount of that, like, I think no one can really comprehend that number.
Yeah, 36 trillion with the debt clock.
Trillion, what does that even mean? Like, this is astounding. And like, crazy it is also, we actually add every 3 months, we add another trillion. That's like, this is crazy to me that it's just $1 trillion like every 3 months. This is like, this is insane. And then also that it's already on par with defense spending as a percentage, more than education, transportation, and especially transportation. We hear some issues there where we actually need some more investments rather than cuts here. So I think, I mean, it's not a secret. The US have to save and cut back, but the thing is, where do you do it, right?
Yeah.
To not, sacrifice your future prospects and your future prosperity. Yeah, it's a mind-boggling task here too.
Yeah, it doesn't sound like the big beautiful bill that's working its way through.
Beautiful bill
doesn't seem like
could add another 5 trillion on top of it.
Yeah, some of the projections are pretty.
I mean, it's not approved yet, but I mean, yeah, it's a little bit like the cat and the tail problem, right? That's going around.
Mr. Bond King internally, what are your thoughts on?
I mean, both of those are great points. Like that's why Trump is pushing for interest rates to go lower. But to Lisa's point, like there's really nowhere else we can cut the budget from unless no politician is going to come in and be elected or be reelected if they come in and say, well, let's reduce Social Security.
Yeah, which is 21% of our overall budget.
Or let's take away Medicaid or reduce Medicare. Like
those are 24. So those two buckets there are 45.
So and then defense. I mean,
yeah. So now you're up to 58.
And then interest is another 13.
Yeah.
Right. And then benefits for veterans and federal retirees. That's not going away.
No.
Like there's just very little places to cut from. And where I think the off-putting part here is Trump, yes, we can lower interest rates, but it's not going to matter on the long end of the curve. Because if we continue at this deficit, the U.S. is going to have to take on more and more debt with our current deficit and with this big, beautiful bill going through, that's going to add to it. And so if you're an investor in the US Treasury, you're going to say, because of the amount of debt, I know it's going to continue going up, but if we're going to increase the rate that it's going to go up, I'm going to demand a higher premium for investing in this bond. So instead of a 4.5% on the 10-year Treasury, maybe you start demanding a 5%.
Yeah.
Right. And then that's just going to, it's a snowball effect, because then the interest on the debt's going to go up, because we're not refinancing all of our US debt at a 1-year term, right? We're obviously doing it at 10, 20, and 30. And so investors have more influence on the long end of the curve than the Federal Reserve does, whereas the Federal Reserve has more influence on the short end of the curve than the market does. So for the Fed lowering interest rates, yeah, that's great, especially if you think that's going to have a parallel shift in the whole entire yield curve. But typically that's not how it works, right? And I'm more concerned that if we don't get a balanced budget in check, you're going to start to see a 10-year Treasury move higher above a 5%.
Yeah, at least with the Fed lowering rates, I think at least the government can refinance the shorter term paper and maybe just play that bit of a game until, again, a stronger economy that can offset. I think that's what's kind of keeping the 10-year in check at 4.5% as well. So I mean, there's a lot of moving parts. But I just thought it was interesting that much of our budget is on the interest. Yeah. If you go back just a few years ago, 2021, it was 5%. So we're at some peak levels. Another way of measuring it. Again, our economy gets bigger, so I think we can afford to take on some debt every year. Just the site we've had since COVID has been
that's
crazy.
also an interesting point, because I saw a chart from the 1960s to today. The debt to GDP ratio, which is a
big factor that
over
people look at.
124% now. And it's just the chart goes up until the right, like pretty dramatically. Normally we like those charts when they go up until the right. This is not positive here. So it keeps on outgrowing our economic output, which is just crazy.
Where I disagree with that, it's more about the servicing. So like we can take on as much debt as we want as long as GDP continues at a decent clip. Now, despite the amount of stimulus that the government has put into the economy over the years, or the Federal Reserve being at 0% interest rates, we've only had a 2.5% GDP growth over those years, is pretty saddening when you think of how much money has been pumped into the economy. But that's going back to the trade deficit thing, so I won't go there. But what I think is interesting is the servicing percentage, right? So like, because we've been at 0% interest rates for so long, we've been able to balloon out our debt, right? Just naturally, because you can finance it at 0.5%, and over 10 years, you might as well do that, right? Now we're in a bigger issue because that servicing percentage is rising from the lows of, I think it was like 2.5%. Now we're probably going to be upwards of 3.5%, 4%. And you start to creep that higher, then I think that becomes the bigger issue, because that's where you start to see potential defaults.
And there's also some risks, and I do not say that we are anywhere near that, but it's like we have some foreign investors in our debt, and that's lower than some blow it out that it is. I mean, it's Japan, UK, China, and again, overall it's 25% of the debt is held from outside, but still we need those outside investors to attract them to being able to issue that, right? So the more and more, there's some trades concerns and reputational damage, the more and more they we might have some issues there as well, right? Then we have another downgrade from Moody's, which was not unsurprising. It was the last of the rating agencies.
Everybody else has done it already,
right? So but still, it's kind of the bits and pieces that add to it. Is like, is this really the safest safe haven that it once was? And that there's a lot has to do with perception. So I don't know if that could be an issue down the road if the US does not attract as many outside investors anymore.
Yeah, I mean, if on my list of 1 to 50 things to worry about before was debt and interest payments, 5 years ago it was 51, and now it's certainly in the top 20. We have to definitely monitor it.
Yeah, I mean, I think it's just more important to monitor it from the interest rate side and what investors are demanding, because it ties into everything, especially when you're thinking about consumers and loans, right? Your 30-year mortgage, your auto loans are tied to the 5-year Treasury typically. 30-year mortgage is tied to the 10-year Treasury. So like if those rates start to move higher, that's going to put even more pressure on the consumer.
Agreed. All right, we'll do a quick spaghetti wall here as well. College moves. I just got done moving my 2 college girls from college back home. So, do you guys have any interesting, funny stories of college moves? Did your parents help, or you're on your own? I'm a little bit older now, so I'll have a different probably take than you 3.
So I never lived in the dorms, so I never
Oh.
had like the rush in.
Okay.
My freshman year, I was in overflow housing because I was going to go to a different college and then switch back to the U of M last minute. And so they put me in overflow, which was an apartment. So I was able to move in like beginning of August. So most of my moves, I was just slowly moved in, I guess, rather than like that big one rush. So my parents would help me with like the moving the bed and the desk. But then outside of that, it was just like small trips I would take.
Yeah.
So
Lisa, how was it for you?
Well, it's a little bit different in Austria.
How was
I know
it?
it's much larger topic here because college kids move like across the whole US to go to college somewhere. It's a little bit different there because it's a very smaller country. You kind of study where you live, basically. And I think the largest move would be to Vienna, which is the capital where you can really study everything you want that is not available in your home city. Otherwise, that's more normal. And there it's more... So I never did that.
It's not a big deal.
I studied where I lived, basically, and I kind of commuted. But for some of them, they move in the beginning. They keep their dorms and all of their stuff in there.
Oh, year after year?
Yeah.
Oh, nice.
And they move their kind of center of... They keep their center of lives there. They move their center of life basically there. They get home on vacation and stuff.
Oh, interesting.
But other than that, they live there for the whole time basically and do not move out and in all the...
Well, that's kind of interesting insight.
So do you need the transfer paperwork for your
It
daughter?
would be nice.
It would be cheaper as well to study over
a lot
there.
easier on me personally. Anything good on you, Kyle?
No,
you University of Minnesota as well.
Yep.
Right?
Yep. Yeah. I lived at home for the first 2 years and then moved myself into a studio apartment.
Yeah. I guess that was kind of where I was getting at. So when, same thing, my college was literally only 10 minutes away from my hometown. It's easy for that, but I did it all myself. It was like, again, easy to do, right? Because you're that close. But so with the college girls, it was definitely a lot of work.
More than just a bed and a TV and a lawn chair.
Yeah, the older one that's at the University of Minnesota was a lot easier because, the furniture, she's in grad student, so it was kind of supplied, but so not too bad. The middle one seemed to pack her whole life up in and out of college. So hers was a lot of work. We went up there and filled up a bunch of vehicles, and she still had another vehicle to fill up. But yeah, it was quite the process. And I'm glad it's over with. But now next year I'll have 3 in school, so it'll be interesting.
So
to
you
see
have to do all of this again?
Yes, multiple times.
Wait,
in and
so
out.
she brought all that stuff. St. Ben's, you have to live in the dorms the first 2 years, don't you?
Yeah, but then they got an apartment. It's just a lot of stuff. And some of the apartments are furnished somewhat, but then there's still beds, and it's like, I don't like the school bed, so you have to haul that home, and then you bring your own bed there. It's just a lot of it's just a lot of maintenance going on in my household.
Like you're sleeping on that school supply bed.
So my point is, I'm glad it's over with, and I'm glad they're home as well because it's entertaining just to hear the family kind of getting along, but then the miscellaneous bickering last night I heard in the basement about some spider. I just kind of chuckled. I'm like, you get it.
Did you put it down there? It's just a fake one.
It's the one at St. Ben, she's deadly afraid of spiders, and so she's yelling for her sister to come save her from a spider. So entertaining nonetheless. So all right, on that note, everybody subscribe and listen. Thank you for listening.